Wednesday, March 5th, market analysis, Stan Ehrlich, 9:51 California time. Good morning. Well, we have a continuingly weakening market on the average for the stock market indexes. And I always start out with the indexes and go to futures. And this time I have a little bit different perspective. I'm going to be showing you about the same time frame for the different charts with symbols that are in the same group, like energies and metals and grains and indexes and stuff like that. So the E-mini, I'm going to go back to April, May, and we have a bull move, an upward slanting pennant, or channel, and it broke out classically, tested classically, came down and held at the last low, which was in the mid-December period, December 20th. And it held at that same price level basically around the middle of January. But when it rallied, it couldn't make any new highs. It didn't make any new highs. It tried actually two more times to generate, you could call it a triple top or a double top. It really doesn't matter too much. And from that point on the second or third last high, February 19th, just 3 weeks ago, we are seeing a very sharp decline that has made lower lows ever since November. Significant. So we have, in theory, broken out yesterday of a double top, double or triple top formation. The downside objective should be, around 54.50. Now, generally speaking, you're not supposed to go back up above the resistance line, which used to be support, because yesterday we got below it substantially and a support area and closed below it. Not by much, but I'm allowing a little bit of a rally here because it's a doji at the moment and we're still oversold. So we need oversold conditions typically, very often, usually produce somewhat of a bounce. And it doesn't have to go too far for very long and then all of a sudden make new lows for the trend, which could happen anytime. Today, this week, next week, I frankly expect. I don't expect much of a rally. If there is, I just don't trust any particular strength at the moment. So we are in an area where I think the market could turn around and start to come back down again. And if you look at the 1-minute charts, you can see that we just came back to what we were doing last night, basically, in the E-mini. Now, the S&P SPY, a little bit different chart, simply because it has different trading hours. Otherwise, it's the father, and then you got the son, ES, and then you got the MES, the baby. So, this did make new highs for the trend twice, but didn't go anywhere. There was no upside follow through. It almost immediately came right back down into the same range that it was trading in before. And then finally, the last couple of days, we did break those January 15th, January 13th, January 13th lows. Not in this case on a closing basis, and we are rallying back up again a little bit at the moment. But again, doji oversold, and there is some resistance above the market. So I'm allowing for a little bit of a bounce, but again, the same other commentary as E-mini. Now, the Spider SPY 1 minute, I got nothing here that looks like it's starting something particularly bullish. Just because it held close to yesterday's low is not yet particularly important. Next, we have the QQQ, the NASDAQ, and we did break out, and it did have downside follow through substantially so. And that was from Monday, Tuesday, and now today being oversold for more than a week, getting a little bounce. So resistance above the market hasn't even reached it yet. Should stop the rally. I'm going to allow for something along the lines of 510 3/4, but that's probably my maximum. And then down. So I don't trust the rally. I'm not looking for much, if anything significant more, and very soon new lows. And my downside objective here is a little under 460. And the 1-minute chart, sorry, ain't got anything bullish. NASDAQ, NQ, basically your same story as you would expect. bouncing off some other support area, oversold conditions, not even up to resistances yet. And the 1 minute chart, looking a little bit more interesting than the others, but certainly not much. Even if we got above yesterday's high, that would still not be a big deal. Next, in my opinion, the Dow futures YM came down to support, bounced off of it, coming closer and closer to the breakout of the double top with a bearish engulfing ER sell signal on the high day, which was January 31st. So we caught a top in this case, came all the way down so far. Again, I don't trust a rally much for very long, maybe 43, 355-ish, and at the most 43, 930-ish. That's the most. Okay, so I do expect it to break yesterday and today's lows relatively soon, and then break out of the double top, and then have a downside objective of 38 to 320-ish. 1 minute chart, nope, ain't got anything yet. Let's go to Russell, another kind of a chart, so to speak, not very many similarities at all. There's no double top. The market simply came up into a huge, major long-term resistance area in November and December. Topped out at the top very accurately. Too bad we didn't get any sell signals up there. And then came all the way down to support, bouncing off of it for quite a while, a couple of months, between a rock and a hard spot. I'm sure I mentioned that phrase often. And now, downside breakout, new lows for a few months, several, and very oversold down to the low teens. Remember, if it gets down below, say, 10, and that's somewhat of an arbitrary number, I would scream bloody murder. The damn thing's going to stop going down any moment, any day, very close to the same price we're at now, blah, 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 because it usually happens that way. So this is kind of close. It's bouncing a little today, but certainly not aggressively. Still a doji, no reversals, no green like we got on that low right there. That was great. That turning point or continuation of an up move, it was very, very good. And that's about the only two I see here. Now the 1 minute chart, still looking pretty bad actually relative to the other ones. Well, let's go to bonds. Now here I have started approximately September of 23, and I'm going to do the same on notes in a moment. In order to get into the first low, which was a bullish engulfing ER buy signal on October 23 of 23, we had another profound as hell buy signal at the bottom of the market January 14th of 25 this year. And I am calling that not the best double bottom I've ever seen in the world, but a double bottom. I'd like to see them closer together like notes. We'll see in a moment. But this still has credibility. Not only that, today I have added a couple hours ago. You see that there was a head and shoulder bottom back from December 27th, give or take, to the last shoulder low on January 24. That worked very, very nicely and finished its upside objective only about a week and a half ago. Past tense. But there are patterns and patterns, and this looks like it could come true. We're starting to break down today below the lows of the last 3 and almost 4 days, not quite, but we're low and last, close to it, and it could easily make some new lows. So are we starting to move down? If so, where might it bottom out and why? It turns out you got a couple little lows over here. I'm going to call that a possible single shoulder, but it's got a double low in it. And I'm calling that a shoulder. Now, I measured the time frame from the average time between those two lows to the bottom of the market, and that's this yellow line, and it says we might bottom out on March 14th. Because the first shoulder lows are almost exactly the same price. Actually, they could be. It looks like a tick off or something. Call it 115.11. I have put a circle around that date and that price. That pinpoints a potential last shoulder low, and we're coming down into it. We only have about 10 days to go, a couple of weeks. So am I going to turn out right or wrong or what? Now, I've done this before in the last 2.5 years I've been doing the YouTubes. with some success. So I'm going to try it again, but this would be the classic anticipation of when and where, what date and what price. You're going to see a potential last shoulder low on a very nice looking head and shoulder bottom. Otherwise, neckline slants downward very slightly. We'd get an upside objective I haven't measured yet, and that would be a little premature, but let's do it anyway, just to be a little optimistic very prematurely. So, oh gosh, yeah. Um, okay, 129, almost exactly. Great. Okay. And it wouldn't break out there. It'd be another couple few weeks to the right, probably. So a little under 29, but that's good enough. Okay. Notes has a much better looking double bottom. This low is only a few ticks, several, below that low, and they're a year and a half apart. I could, and I might, make a case for the same pattern on bonds as I just did in the notes. I'm not going to do it yet, but you can see that the neckline might have been established from a high yesterday, and it's just slightly upward slanted, and the timing would be almost exactly the same, blah, blah, blah. So let's see if we still continue to get a bottom forming in general in interest rate futures. I'm slightly bearish at the moment for just a bit of a dip. Next. Now, crude, I'm starting about August in energies, is now oversold today for the first time in quite a while. Okay, well, actually, it got oversold for 2 days back in early February, a month ago, but that was the first time since early September. So it's only the third time since September, or second September. And it almost bumped into support, plus a bull trend line. So I think we're almost at an upturn, possibly a little bit lower, but I'm looking for a turning point back up again in crude with the possibility of minor for the next short number of days, minor new lows, lower than today. Heat, same time frame, major support stopped it, rallied into major overbought conditions way up there. I'm sure I screamed bloody murder. It was at 91 or 2 on the RSI. Markets rarely get that overbought on a daily data basis. So now what? We're hitting support. We're right in the middle of it right now. Lows didn't hold very accurately. That's not good necessarily. We're not quite oversold, but super close. Well, should be trying to turn up about the best I can say at the moment. Not too much else to go on. Next, in natural gas, it's different. We are overbought. Now we're starting to get above and maybe even stay above a major resistance area. Overbought again for the last couple of days. Should be trying to turn down. Don't see the evidence of it yet. But today's high is not higher than yesterday's high, so it couldn't match or break through that. But the close looks like it's going to be significantly higher. I'm looking for a top, and I'm not seeing it yet. Next, we got gold. I'm ambiguous about this at the moment. Obviously, the trend is up, and obviously, I've talked about for weeks now a new high for the trend, overbought, got a sell signal, didn't particularly work out very well, didn't work at all, frankly. And then it came down to support, which was perfect. And now it's starting to hit its way up. So one would deduce up because of the trend, intermediate, long term, and basically short term, bouncing off support nicely. So I have to say up, but I'm a little bit cautious here. So no signals. I have to wait a little bit. Silver might be forming a major top, but it's not acting that way in the last I'll give it 2 days. It did get up into resistance 3 days ago and start to pull back slightly, still a higher close, but I didn't mind that. But yesterday it started into resistance a little bit with a slightly higher close. And today it's just jumping into the resistance area, now already halfway through it, with probably a strong close and not anywhere near overbought. If this starts to get above 33 and a half, especially in a closing basis, then I'm going to seriously consider abandoning this head and shoulder top concept because it just didn't act correctly in the last couple of days. It should have, would have, couldn't got, could have gotten softer quicker, and it ain't doing it. So next, platinum. Boy, some great past signals. Just got oversold at the bottom of support. Classic place for it to start rallying. And on the close of that day, February 28th, it sure as heck doesn't look like it. But I repeat, that's exactly the right place it could bottom out. And maybe I said that on that day. I hope. So obviously the next day it started to prove me right, and then up and up if I had said that. Okay. So I like what I see. I'm modestly friendly. I think we're going to go right back up into this big resistance area. So I'm looking for 1030 and a little higher, I guess. I don't see why not. High grade copper shot up like a rocket today. This could be the second highest close for the what trend? Well, short term, yes, that's 2 months. Sideways for over half a year, yes, neutral. And a little bit of a bearish tinge to the trend if you're not looking at the last 3/4 to a year. So we're not yet overbought. We could get up a little stronger. We might even make another new high. I might even get another sell signal. I have to be mildly friendly with a lot of caution here. I don't like markets that jump up and down like this out of the blue. So friendly, yes, but I'm not sure about the upside objective, and I didn't get any signals, and I don't have too much else to go on. Closing above 4.90, let's say. Yeah, that's good enough. 4.90 would look bullish, but I'm concerned that you're going to get overbought at the time that that happens, so you got to be careful. Next, soybeans, oil, meal, corn, wheat did hold yesterday in soybeans. They didn't collapse, thank God, and we're oversold, starting to come up some today. I'm still holding on to this concept long term that this is a major bottom formation. Yesterday, we tested the previous bear trend line, which was good for way over about a year and a half. It was tested once before classically. This time, it's also unusual it would take so long to test the line, and it tested support as well because it was able to get down so low where the line was. Not only that, there's a horizontal support level as well. So 3 reasons. I think I mentioned 3 yesterday. Coming up okay. I like what I see, but I wish it would get stronger quicker. Still overbought during today's lows. Let's see if it can get some more upside momentum going here. Soybean oil made a new low here, but it's not crashing through any major support area yet. But it is oversold for 3 days, and so I think it's about to turn up also. And I do have this formation. Now, I might start talking a lot more about the lows that were made way back here in February 26th of 24. Now, that's a little over a year ago, as being part of the whole situation here. That could be, and I don't know it yet, because this has to bottom out and start to head north. Then I've got a shoulder, shoulder, head, shoulder, and shoulder. Remember, head and shoulders are my favorite patterns. And I would have to redraw the neckline like this. But what the heck? That's not that much different. So, I'm leaving it like that for the moment. Looking for a turn up. Soybean meal made a new low for the whole trend yesterday. But like a ping pong ball being pushed underwater, it's starting to come right back today, but not very aggressively. I don't think it's that big a deal yet. I want to close over 306, hopefully over 310. Then I'm going to be a lot more optimistic that this was a washout, a bear trap, and a classic example of that, and oversold. The closing price was just almost exactly the previous lowest low a couple of months earlier. So no follow through. That's one of the keys I'm looking for here. And we're not getting it I'm thinking it's going to start rallying, but not super sure about it. Oversold conditions on a big, big break in corn. Yes, tested support, came super close. Extreme oversold conditions down to 10, maybe even a hair under. Um, this could have been a major low, and it might correlate with the low that we saw way over here, February 26th, almost a year ago. Very interesting. This would be the neckline. Head and shoulders inside, maybe a larger head and shoulder bottom, with the last shoulder low having been made yesterday. Nothing wrong with all that. Next, wheat. Lower lows, no head and shoulder, no double bottom, unfortunately, but oversold like crazy and no follow through. So it should rally, but it depends upon how much and for how long as to whether this low yesterday is going to go down as a major bottom. I just can't tell at the moment. Okay, cattle did have a buy signal yesterday in the support area. Classic combination I love. Turned around with a vengeance yesterday. Day trade profits today, overnight positions more profitable, coming up very nicely. I think we're making new highs as I just spoke a second ago. Looking good, up 57 at the moment. Maybe it's going to hit buy stops above 196-ish. I'd love that and close above that. Hogs, support area, oversold condition, turning up sharply today. I'm liking what I'm seeing. Minimum rally is not too much more, around 86 and third. But if that gets broken and it keeps on moving up out of the support area to say 88 and higher, I don't see anything wrong with challenging all the way to the top again. And we're back to the E-mini. Climbing up 3 points on the day, or 30 rather, on the E-mini. Made a minor new high while I was yakking away. Not collapsing. On the other hand, nothing super bullish as far as I can tell on any of these 1-minute charts as yet. Nope. All of my commentary before still stands. You guys have a great day and profitable trading to you.